The question was, what about volume confirmation? I'll talk for a few minutes about volume because it is one of the final steps in our strategy. First of all, by volume, we're not worried too much about average daily volume. With an individual stock, we're not going to trade anything that trades less than 500,000 shares a day, preferably 1 million shares a day, because of liquidity issues. If you want to get out, it may be difficult to get out. But for ETFs, they're synthetic instruments, so it's less of an issue. The only thing you have to deal with is the spread between the bid and the ask. But what we do look for, not average daily volume, what we look for is changes in volume from one day to the next. And we use average volume to determine that. For example, one of the ETFs right now comes to mind is Market Vector Steel. SLX is the ticker symbol. What we noticed was a couple weeks ago when it pulled back, it broke below its 50-day moving average. When it did so, all of a sudden the volume spiked very high for several days in a row. If it traded, I don't remember exactly, but if it traded 500,000 shares a day, for example, it was trading like 1 million shares a day for several days, much higher than average volume for several days in a row. What that told us is institutions were, obviously active in that sector. And which direction were they active? Well, they were selling, obviously, because the ETF went down. Now, the volume itself will not move an ETF because they're going to move in correlation with the portfolio, but it does show you where institutions are active. And normally, if you look at the individual stocks that make up the ETF, you'll see the same kind of volume patterns, high volume in those stocks as well, to go along with the ETF. So what we look for is changes in volume. If the volume is higher than average and the ETF is dropping, then that's obviously a good thing. You want to be short. If the ETF is rallying, but it's rallying on lighter than average volume, we're going to be a little nervous about it because there's not a lot of institutions backing it. So it's very simple. We just look for high volume in the uptrends and not as much so, but high volume in the downtrends as well.